Real estate is moving, so how is Kingwood doing? This is Hanh Jones, Sweet Life Real Estate Group with JLA Realty, and today we're going to look at Kingwood and take a look at 3 different metrics to help us identify some trends and figure out where prices are going in the future. Stay tuned. All right, here we go. First metric we like to take a look at is year over year sales. So what we'll do is we'll take a look at the previous year. In this case, it's 2021, and take a look at what we've been doing so far this year and compare the two and see how we've been trending in terms of price. Well, when we look at this, we're going to look at dollars per square foot. It allows us to compare homes in terms of value, apples to apples. So some homes might be larger, some might be smaller. But if we look at dollar per square foot, it's going to give us a very, very fair gauge across the board in terms of value. So in 2021, we started off the year at $115 a foot, and that rose steadily up to $135 a foot at the end of the year. So pretty impressive move in and of itself for 2021. Taking a look at 2022 so far, we continued that same trend, and we started off the year in the high 130s in terms of dollar per square foot, spiked up, and it's been leveled off at about 145 a foot. So that tells us that if prices level off like that, the question is, will the trend continue, or are we going to level off? We'll know here coming into the summer months. But look at the gap. When we compare the same 4 months of last year compared to this year, that's a pretty significant gap, right? And so I've done the homework for you so you don't have to do the math. That's 20%. That's 19.6%. So we'll round up. That's 20%. So that is a 20% bump. So if you're a homeowner already in the Kingwood area, congratulations. You have a significant equity position that came to you over the past year. So congrats, right? So that's the first metric. The second metric that we're going to take a look at is going to be the same information, but it's going to be split out between 1 story and 2 stories. So we look at year over year sales for the same period. In blue is the 1 story, in orange is the 2 stories. And traditionally, 2-story homes cost less to build just because you have one foundation, but you're just building upwards and things like that. So that, number one, that attributes for some of the price disparity. The second thing is that there's just less 1 stories compared to 2 stories, especially in Northeast Houston, the Kingwood area. So that kind of creates a little bit more demand for empty nesters, first-time home buyers, people looking for entry-level home, things like that. So when we look at the difference here, I always like to look at the difference when we run comps and things like that between 1 and 2-story homes, because 1-story homes will definitely fetch a higher price. And if you look at the averages here, again, I did the homework for you. It's about 7% difference, right? So 1-story homes will fetch about a 7% higher price typically. And again, this is based on these averages over a 2-story home. So pretty interesting. So again, if you have a 1-story home or a 2-story home, you can kind of use this as a general barometer in terms of value. The third and final metric that we'll take a look at is going to be months of inventory, right? And this is specifically for Kingwood. We went back 5 years. And what months of inventory tells us is that assuming that there's no more homes that come on the market, how long will it take for the current buyers to exhaust that supply? That's what this metric is, right? So if you look at the numbers here on the left, we're ranging from 0 all the way to 5.5. And over the last 5 years, if we look at in recent history, it's been very spiky, it's been very volatile, but average is about 3.5 months for Kingwood. And then during pandemic, we come down here post-pandemic, there's been a lot of buying demand, a lot of buyers coming into the market, chewing up that supply. So it drives this metric down. So what this metric does is it gives us an inverse related to prices. This is telling us based on supply and demand, when the ratio goes to lower numbers like this, we expect higher prices for homes, right? And we can see that it's leveled off. I mean, it dropped here under 1, and it's been hovering around here around the 1.5 mark. What we did was we drew a red line here right at the 2-month mark, and that seems to be the line in the sand. So if we come back in here in the next month or two and then go above 2 months supply, we could see some tapering in prices, some cooling off in terms of prices from that perspective. So a lot of factors go into this. Obviously, the number of buyers that are out there, obviously interest rates. As interest rates go up, a lot of buyers get kicked out of the market, out of the buyer pool. So there's a couple things that can come into play here, but what we're looking at this in terms of from a trend perspective, we want this guy, if we're looking at tapering or cooling off of prices, this guy needs to come above the 2 month supply mark. If things stay down here, the market's going to stay pretty heated. All right. So those are the 3 metrics. Hopefully it was worth your while. If you like the information here in the content, please like and subscribe, and we'll have other information coming out in the future. And right now, again, the market's moving really quickly. So if you're a buyer out there and you're looking to develop a strategy, or if you're a seller out there trying to maximize the value of your home, we'd love to talk to you. This is Hanh Jones with the Sweet Life Real Estate Group with JLA Realty, helping you live the sweet life. We'll see you next time.